Welcome to the B.F. Anderson Technical Report for March 31st, end of the quarter. We'll get into earnings season here shortly, but I did want to show this particular graph, which is showing the unemployment claims, and you can see good news for the economy. People are traveling and buying stuff. Well, this was on CNN's webpage, but anyway, you can see here that unemployment claims are really coming down to pretty much record low levels. You know, I can remember when I started in the business in 1976 at Merrill Lynch, you couldn't give a stock away. We were in that period of time where the baby boomers really didn't turn 35 years of age until 1982. So there was a real lack of consumption. Therefore, we had what we call stagflation. But right now, we're seeing inflation, but we're not seeing stagflation. So hopefully this continues. Did want to highlight a particular indicator we use, which is the bull-bear ratio. And as you can see here that, market bottoms, and what I'm really trying to get across about sentiment is a secondary indicator, but when it reaches extremes, it can be somewhat of a primary indicator. So you can see here these extreme readings, back in 1990, the financial crisis in 2009, and then we just reached that level here recently, and then we've gotten a bounce up. So, when you get into extreme fear in this survey, it really becomes apparent that the market is trying to put a bottom in. Then also the exposure index, pretty much the same thing. You can see that, markets tend to make bottoms when you get this level of extreme fear, that is a measurement of fear. Here's the put-call ratio, same thing. Now, we didn't get any kind of extreme readings in the put-call ratio, but you can see that it's somewhat reversed, and basically we're starting to see more greed than fear. Another indicator that I wanted to bring to your attention, and this is just an example, this is a ratio of the S&P 500 as a ratio to the 30-year Treasury bond. What I'm trying to point out here is look how this ratio correlates with the stock market. I mean, here's the S&P 500. This is the ratio. They move almost in tandem. It's an amazing indicator. We may add this to our list of indicators. So here's where we are now. So what's interesting about it is that the ratio has made a new high. However, the S&P 500 has not. So we'll have to see here how this all works out. But we're seeing some good news here. The NASDAQ looks like it's trying to put in a double bottom here. We got what we call a wedge pattern where we're starting to come up in like a wedge, and then the 10-day moving average is crossing above the 50-day moving average, which is what we would call a golden cross. However, we'd like to see this get back above that 200-day moving average. We're seeing much more improvement in the weekly reading as well. You can see we came down here, made that double bottom, coming up, trying to break above that 35-week moving average. Now here's the mid-cap stocks. Again, somewhat of a triple bottom actually. Came up, we've got the golden cross, and also we're breaking out above that 200-day moving average. Hopefully the market is telling us that, it's time to start buying again. New York Stock Exchange, all the stocks on New York Stock Exchange above the 200-day, golden cross. Index looks much better. Small caps, we're seeing some improvement there. We had a little bit of a pullback yesterday. However, small caps are also starting to show some signs of improvement. S&P 500, big improvement there. We've got it breaking out above the 200-day moving average, and then if we look at the long-term picture, you can see that the trend line is actually above the 35-week moving average for 2 weeks. So this is now a buy signal for the S&P. The only thing we're waiting on is the NASDAQ. These are our three economic indicators. You can see here interest rates have been steadily climbing, starting to kind of form a little bit of a base here around 2.4. Oil prices all over the place. You can see here just kind of a lot of volatility. And then the financial stocks, along with interest rates, have shown improvement, gotten above that 200-day moving average. New lows starting to settle down. Yesterday, we only had 25 new lows, under 40 for the first time in a while. That is a big improvement. Trend strength. Realize 2 weeks ago, we were at a 0% trend strength. Now with the NASDAQ, we're at 50% trend strength. If we look at the S&P 500, we're at 100% trend strength. We were down here at 0. Now we're up to 100. So it looks like the market is trying to put in a bottom and turn. Volatility index, good news there. We're below 20. We're at 1933. Now this is a 5-day moving average on the VIX, but volatility is coming down. That's very positive. This is, the buy signal generally comes in on the VIX when you get above 30 and then cross back down below 30. Well, we're now below 20, so that's good. Vanguard, inflation-protected securities. I kind of thought this was an interesting graph, just something I wanted to look at or keep an eye on. You can see here when we had all these big inflation fears, this particular fund, they invest in things that if you're worried about inflation, that's where you go, to the Vanguard Inflation Protected Securities Fund. And you can see here that, a lot of action to the upside. Now it's really kind of starting to tank. Kind of wondering if maybe the inflation is transitory. This is interesting here. Treasury bond, 20-year Treasury bond. People always talk about how risk-free bonds are. This thing has really come down. So you can see as interest rates go higher, your bond portfolio is going to have a problem. Now, in the top 5, let's get to the top 5. Now, I want to really emphasize about the top 5. This is not a buy list. This is just simply showing where the strength is in our database. In other words, this is a momentum reading. So CF Industries, very strong uptrend, made a new high, came down, broke that 10-day, somewhat, settling in. A lot of volume came in on that on a couple days ago. I would be cautious with commodity stocks at this time. Occidental Petroleum continues to be strong, trying to base up in here. If we get a breakout to the upside, that's something to be aware of. Here we have Zim Integrated Shipping. This is a shipper. Again, this is a commodity-based business. They do dry bulk, mainly as what their ships are carrying. But you can see it continues to be in an uptrend. You kind of had a real good jump in volume right here where it broke out. However, kind of somewhat failed on that breakout. I would be cautious here. Alpha Metallurgical Resources, which is a coal company. You can see, again, these commodity stocks, kind of somewhat of a V formation here. Nothing real deep and serious. However, forming a somewhat of a proper base, we'll just have to keep an eye on it. Here's Antero Resources, which is oil and gas exploration. Very strong uptrend, above the 10-day moving average, positive trend. So what I'm saying is the commodity stocks continue to be strong. However, this is a very cyclical area and can go bad in a heartbeat, but we'll just have to see. If you have any questions, please let me know.